The framework is designed to optimize a business payments and banking flows while building a comprehensive strategy that enhances efficiency and minimizes the risks. The Soltesz Payment Framework helps businesses reduce costs, prevent banking failures, and improve cash flow by creating a structured, scalable payment strategy. It minimizes risks, strengthens the banking relationships, and optimizes settlement terms to enhance efficiency and operational stability. And with a proven track record across over 1,000 companies, it eliminates guesswork and builds a strong foundation for a long-term growth. So let's go through the 8 steps of the Soltesz Payment Framework. Step number 1, collect the information. The first step is to gather all the information about the group structure and its companies, including jurisdiction, activity, prices, details about the shareholders, directors, contracts, providers, and everything more. The importance of this step is to create a complete picture of the group in question. By thoroughly understanding all aspects of the group and its companies, we can better assess the risks, ensure compliance, and make more informed decisions. Number 2, create a visual chart. In this step, we draw a visual map of the group structure showing how different companies and their key personnel are connected. This visual representation helps clarify the relationships between entities and how funds flow through the organization. It allows businesses to identify potential risks, bottlenecks, or inefficiencies within their structure and understand interdependencies that might affect overall payment and banking flows and might pose risks. Number 3, relationship and your key personnel. Businesses are driven by people, as you know, and understanding the roles of key personnel, such as your directors and the shareholders, is absolutely critical. The actions and risk profiles of these individuals behind the business can impact the company's overall risk assessment from a payment and banking perspective. For example, if a director is associated with high-risk activities in other companies, it could raise concerns for banks and other financial institutions who might provide services or even higher fees to these low-risk activity company in question. So this step is absolutely crucial because it highlights how individual behaviors can influence the companies and therefore the whole group's risk profile. Number 4, fees and taxes. Understanding the fees charged by the banks and the payment providers, as well as tax implications, is absolutely fundamental to manage costs. Because many businesses focus solely on taxes without considering the overall payment and banking strategy, which can lead to higher expenses in the long run. For example, if a company incorporates an offshore entity, it might reduce the taxes, but this could lead to higher banking and payment provider fees due to the higher risk nature of these offshore entities. Groups have to plan their taxes in accordance with their payment and banking costs, which helps them to avoid unexpected expenses and optimize payment and banking risks and flows. Number 5, terms and timelines. Different payment providers and banks offer various settlement terms and timelines. Assessing how these terms and delays can impact the group's overall liquidity and cash flow highlights operational bottlenecks and potential risk areas. For example, if a payment provider offers attractive fees, but it takes longer to settle the transaction, it can seriously affect the company's ability to pay their suppliers, which can lead to lost opportunities or increased costs. So understanding these timelines helps businesses maintain healthy cash flow and avoid disruptions, making this step critical for operational efficiency. Hedging and foreign exchange. International operations use multiple currencies, and fluctuations in exchange rates can significantly impact your profit. Implementing hedging strategies are, of course, vital and known, but when a business maintains funds in a foreign currency account, it also needs to consider other risks, such as the safety and the stability of the bank where the funds are held, or the tied-up liquidity in those different currencies, which can lead to cash flow challenges. Carefully planning for currency flows is a balancing act, but it's totally needed. Number 7, comprehensive risk assessment. An operation-wide risk assessment is vital for addressing all possible risks, such as technological, compliance, and security risks, helping to create backup and contingency plans for all possibilities. Businesses also need to implement strict due diligence checks on all their banks and financial providers, balancing cost savings with risk exposure. For example, regulatory differences based on jurisdiction could mean that using an offshore bank might be cheaper, but might pose significant risks in terms of regulation, safety, or even settlement timelines. Number 8, ongoing monitoring. One thing is constant: the change. This quote is more valid than ever because continuous monitoring and re-evaluation is absolutely essential in an ever-changing environment. As your group of companies expand in volume, activity, and jurisdictions, its payment and banking needs will also evolve. The payment and banking landscape is also dynamic. It offers new innovations, fees and terms, adhering to changing regulations, and more. So businesses must regularly assess their payment and banking strategy to make sure that it remains optimal and aligned with their current operations. Regular assessment of payment flows, provider relationships, and risk exposures help to make sure that the payment and banking strategy continue to support sustainable growth. So see, every step in this Soltesz Payment Framework is interconnected but absolutely vital to get your mind working, and you start asking all of those relevant questions. What about this? What about that? You identify where are the possibilities, the bottlenecks, the risks, the potentials. And in this way, at least you will start thinking about how your money moves internationally. But for that, you need to understand a little bit about how banks think. And this is what we are here for, just to explain how banks think in order to understand how they work and how they work with you. So let's wrap up. In summary, we are working with very strict banking and payment regulations, so you need to understand all those risks which could affect you. You need to understand that you're in an evolving landscape. Everything is changing all the time. So you need to make new decisions every single day. You need to keep your eye on the market. You need to evaluate what works, what doesn't work, how does it affect you, what are the costs for you, what are the risks for you, and always be aware and alert for all of those new fintech innovations where it could be something much better, much safer, much cheaper for you and for your specific operation. Strategic planning is an absolute must, and you can't just outsource it to some other department who doesn't have the full picture. And you need to have experts who are not working for commission and they are not working for their own pocket, but working for you. You need to see what is the best opportunity, best provider, best innovation, best technological solution, best banking and payment rail for you. And you need to make a decision based on your own evaluation and risk assessment, not just by asking people randomly that what works, what doesn't, and just hoping that it's going to work out for you too. At the end of the day, it is your own funds. It is your own money. You need to make sure that you are making the relevant decisions over your money and your flows. Do not rely on introducers whose only aim is to set you up with someone, earn a lot of money, but pay attention to the bigger picture. Really understand that how certain decisions affect other areas of the operation. Something is cheap, but it's hard to integrate. Something is onboarding you quickly, but they are regulated under a country you never even heard of. There are so much more than we can discuss, but please feel free to reach out to me because only together we can create a transparent and ethical industry where every player is seeing clearly what are their risks and responsibilities. And please don't be shy. Share your ideas, your opinions, your case studies, your current thoughts, because that's the only way that we can raise awareness of the problem and make sure that the iGaming industry is going to get out of this high-risk classification and understand payments and banking just as much banks and payment providers will understand us too. Thank you very much for your attention.